open a long position. Had it been a break through the low, we would have been selling and would have selected short. So we're going to select long right here, and then you're going to literally enter as soon as this candle closes. Now, rule number 2 is how we find our stop loss, meaning where we accept that we were wrong on the trade, and our target, meaning where we want to take profit. Now, first, for our stop loss, which is our invalidation point, we want to drag this right up to 2 ticks under the POC. Now, the POC stands for point of control, and it's this middle level you see here on this chart. As you can see, it's right at 756. So if we went 2 ticks, that's going to be 755.5, because a tick is the smallest amount that the market can move. And for NASDAQ, which we're using in this example, it moves in ticks of 0.25. So we would just go 2 ticks under that point of control. And for our target, we're going to be going for a fixed 2-to-1 risk to reward. To find this, you're going to go on the tool right here, and you see that risk to reward ratio right in the middle. You want to drag your target until that ratio is 2. And what this means is our target is 2 times the distance from our entry as our stop is, meaning we make twice as much profit when we win versus how much we lose when we're wrong. And this is very important to staying profitable in the long term. After you've mapped out your entry, stop loss, and target, we're good to execute the trade. To do this, we're going to go up here to the top left, and we're going to click buy, and then we are going to just click market buy. At that time, we're going to take our stop loss and we want to drag it down to our stop loss level. And we want to take our target and drag it up to our target. Now, as you can see on this trade, we had a $305 risk to make $620. After you enter the trade, you just sit back and let the market do the heavy lifting for you. And in this example, you can see it hit the target very quickly. And a lot of times that happens when you're right on this strategy. Whether you're right or wrong, usually you're in and out of the market really fast. Now, don't forget, there is a third rule to entries, and that is that the entry must happen before 11 a.m. Eastern Standard Time. Remember, we said 90